champ is here. That's right. 3, 2, 1. Let's go. God gave me a talent, so let me flaunt the gift.
Broadcasting live from the Property Cashflow Studios, this is the Property Cashflow Experience, the world's leading podcast on building cash flow in property, real estate, fast. Hosted by the Cashflow King and your favorite mentor, the possibility of living the life you desire starts here.
Damn.
Let's get ready to rumble!
Hi and welcome to episode 2 of the Property Cashflow podcast. I'm your host, Mr. Neil McCoy-Ward.
And I'm the co-host, Dwayne Squires.
Yeah, so today we're going to talk about rent to rent. Mm-hmm. What is it? Because I know some of you will be listening not just from the UK, but overseas as well. So we're going to talk about rent to rent and how it made Dwayne and I financially free in a very short space of time. And we both have a rent-to-rent business that we jointly own now. So I started the business back in 2013. Dwayne came on board last year as a partner. So he bought into the business. So we're partners in the company, and we're just growing it from strength to strength. So I think, Dwayne, do you want to add anything before I give an introduction?
Yeah, I feel you've done a good introduction. We're going to, in this session, give a good overview of what rent-to-rent is. But just to quickly add, so I joined the business 2019. So if you remember, if you listen to episode 1 of the podcast, we talked and underlined the emphasis of investing in income-producing assets and property strategies. So in this case, I joined in 2019 by investing in a rent-to-rent business, which is forward-thinking lettings, and that produced the income to become financially free. Now, there's different paths that you can take. You can go into deal sourcing, you can go into rent-to-rent, you can go into serviced accommodation, and there's different ways you can go down that route. You could start it yourself from day one, or you can leapfrog and go into it by buying a portfolio as such, buying into a portfolio of rent-to-rent. Now, hopefully in the future episodes, I know we're going to touch upon deal sourcing, and that's how I generate my income to invest in this asset base. And that's the fluidity of investing in these 3 strategies that we're going to be touching on over the future.
Yeah, and let me just clarify one thing, because Dwayne's using the word investing there. So just to clarify, because some of you, when you hear the word investing in terms of property investing, you think instantly of purchasing a property. So Dwayne's not talking about that. He's talking about investing into a business. So that's a limited company under UK law. All right, so it's a business. He's not buying any of the properties as assets. He's actually investing into shares in the business. So it's a little bit different, but we're going to teach you all of this as we go through with the podcast. So I just want to explain them. For those of you who don't know what rent-to-rent is, I'm going to explain what it is now, very simply. And if you want to see sort of like advanced tutorials, you can go to the website. We've got a 2-hour webinar on it. Or you can go onto the YouTube channel, Neil McCoy-Ward, and you'll see on there some advanced videos explaining it. But just to give you an overview now, rent-to-rent is simply taking a property that is, let's say you've got a landlord, and he or she may have, let's say, 4 bedrooms in that property, or even 3 bedrooms and 2 lounges. And it would be taking that 3-bed, 2 lounge and turning one of those bedrooms, one of the lounges, into a bedroom. So now you've got 3 bedrooms, and rather than 2 lounges, you have 4 bedrooms, all right? So you've basically got 4 bedrooms now. And rather than rent it to a family on a single-let basis as a buy-to-let, you're now renting it by the room. So that could be to professionals or workers or students or any of the other tenant types, tenant groups. And the benefit of that is you guarantee the landlord their monthly rent, right? So the landlord still gets their monthly rent, and let's just call it £1,000 for this example. But then you take those rooms and you rent them for £500 each. Okay? So what we've got now is we've got a property that is £1,000 of expenses. You're also going to have about $350, $400 in utility bills. If students, it will be less because there's no council tax. So that's a point to make a note of. There's no council tax with student HMOs. And again, an HMO is a house of multiple occupation, just in case you're not aware what the abbreviation means. So here we have it, £1,000 of cost to the landlord guaranteed every month. 400, let's just call it, of expenses, utility bills. So that's gas, electric, water, broadband. You might have a cleaner. Okay, so you got 1,400 going out, but then you have 2,000 coming in. So that leaves you with 600 profit. That's your net profit. There's no other deductions to come off that in the middle. So that's just a typical example of an unlicensed property. Because once a property gets to 5 bedrooms or more, that's when licensing kicks in. There's all sorts of other regulations. But if we're just talking about a very simple 3 to 4 bed conversion, it's unlicensed, it's under the radar, there's no sort of laws or rules around it apart from your typical tenancy rules and laws and regulations. And you can make a very simple £600 every single month on each property that you manage. Dwayne, you want to add anything?
No, I think that covers the real basics of rent to rent. I think just to add, the key principle here with rent to rent is just see it as a very simple strategy where you're standing right in the middle between you, the landlord. You're standing right in the middle. You work with the landlord and you're working with tenants. Now, you can use rent to rent in different ways. So the example that Neil's just talked about is an unlicensed HMO for the residential market, be it professionals or students. But you could be using rent to rent for licensed HMO. You could be using it for actual office space. You can really be as creative as possible.
Serviced accommodation.
Serviced accommodation. There's a raft of things. Don't be limited by just one area.
Yeah.
You can apply it because there's probably some people that might be listening saying, well, rent to rent just won't work in my area. So a great example is the Northeast, where I invest. So Northeast, the type of tenants that you have up there, there's a huge amount that are on benefits rather than working. So there's some people who would be their investment area, and they may be thinking, well, if I house all these individuals that are on benefits, sat in the house all day, every day, there's going to be a lot of issues. There's going to be a lot of chaos. And so maybe HMO doesn't work for me. Maybe on the balance sheet, on paper it works, but in reality, maybe it doesn't. But I would like to say rent to rent can apply anywhere. So in the Northeast, serviced accommodation works. Or you can still do rent to rent, but you can do it on a standard buy to let type of property. So you're taking a property that's a typical 2-bed terrace. You're doing a guaranteed rent with the landlord at a much lower rent, but then you're obviously renting at a higher value by adding value to that property. Maybe you're redecorating it. Yeah. Maybe you've done some element of extension or cosmetic improvements. But just don't be limited by what you can do with rent to rent. You can apply in any area within the UK. You just have to take a step back, think what naturally works in my area, given the pros and cons, and then go out there and apply it.
Yeah, I think that's a good point. I mean, to give an example of that, I had a mentoring client, and I think it was about 2 or 3 years back when he finished his program, but he was with me for 2 years. His name was Tom. Do you remember I told you about this? He actually came to me that one session and said, what do you think of this idea? And he said, there's this massive empty block of offices in the middle of the city centre. Yeah. I won't say where because there's still stuff ongoing with this block, right? But he was like, what do you think of this block? And I said, What? You mean like do a rent to rent on an office block? And he said, yeah, I've got all these ideas. And I went, no, I don't think it's a good idea. But it was only after the session, I took a step back and thought about it. And I realized, actually, no, I shouldn't have said that because my job as a mentor is to just, advise based on my experience. The fact is, I don't have any experience in what he wanted to do. He wanted to set it up as an office block with all furnished offices and serviced offices and all this. So I said, come back for a session. Let's go over this again because I want to open up the possibility of doing this. So what actually happened was he took it on. It didn't cost him a penny down because he did it with his business partner. There's a lot of stuff that went on. That's why I can't go into it too deeply because there's still stuff going on with this. But what he actually did was he took that office block, they put some money into it, and they rented out the offices, like one floor of it straight away. So these offices were rented out. Right. And then he said, right, I'm going to do some of these offices as hot desks. So this was my idea, like hot desk, this big area. So loads of people who might be solopreneurs or they might only have 2 or 3 people in their company, they come and, they can use it whenever they want. They can use a printer and coffee. Yeah. And I was like, right, meeting rooms. Keep those tiny offices there because they're too small as meeting rooms. £25, £30 an hour, just rent them out as meeting rooms. right, what next? Why are you giving away these car parking spaces for free? Charge for them, because it was in the city centre. I was like, you can easily get £10 a day parking. So he started charging for these spaces. Then he said, I think that's it now. And I was like, no, virtual office, virtual landlines, mail forwarding. So it was like constant, all these ideas. And before you knew it, he was earning ridiculous profit. Like the profit was so ridiculous. I think this is one of the reasons it caused him issues with his business partner, because he didn't have a strong enough contract, right? But that's a whole nother story. But what he did was he generated massive cash flow from an office block, which again is really niche and outside the scope of what we're talking about here. But it's just to give an example for people listening that, you can actually do other things with rent to rent.
Yeah.
But, the bread and butter of rent to rent is an unlicensed property. But what we focus and specialize in now is licensed properties. Because, I want to be honest and real with you. The first time you do a licensed property, it's a lot of work. And you're going to have a headache because you're like, oh, this is a lot of work. I've got to learn all this stuff. I've got to read all these documents. I've got to learn about liaising with the council and the housing multiplication officer, all this sort of thing. But then once you've done it once, it's simple after that. And you can go from earning 500 to 750 or 800 for unlicensed houses to all of a sudden clearing over £1,000. Some of the clients, clearing almost £2,000 a month from a licensed property. And that's cash flow, that's net profit. So you don't need many of these licensed properties.
Yeah, and I think
it is another level.
Yeah, and I think just to add a few things to that, I think, so we talk about the cash flow, so you could be earning £500 to £1,000, which is a really strong amount of income. But when you look at rent to rent, it benefits all parties. So when you're looking for a landlord, the landlord's getting a guaranteed rent. So typically the landlord might be having challenges maybe with voids, or there's something or an issue they might be having, but you're taking that problem away. You're giving them an asset that they actually now are getting a consistent amount of income month on month. So it really takes away the headache from them.
Yeah.
Then you are also then providing a product to a tenant that meets what they're looking for. So you might be decorating it, adding a few more additions to it, and it's now turned into, let's say if we keep it at the residential market, a nice product where they can go home, they can relax, and they can actually call it a home rather than a resting place or anything else it might be. So not only are you servicing yourself, but you're actually giving value to the marketplace, and in return you're getting value back in terms of income. Yeah. But just adding on to it, rent to rent's such a good strategy to implement because it reduces your risk.
Yes.
You can get your feet wet. So if we talk about a standard vanilla buy-to-let, which I've got no issues around, but if you're a first-time investor, you could be on the sidelines being very conservative or not, thinking, will it not work? I've only got 20,000 or 30,000 or 40,000, whatever it might be. This is what I've saved up over the last X amount of years. Should I not? Should I not?
Yeah.
Well, if you just take a slice of that, a small fraction of that, and invest it in a rent-to-rent deal, you're getting cash flow, so you can get a return on your capital straight away, or even in less than 12 months. You are also testing the market, and if it doesn't work, well, rather than you now being sat with an asset that, although it's got a high value, it's not producing income. And second of all, you're learning how investment works.
Exactly.
So, I think one thing I've learned from you is, and what you can see around the marketplace is, there might be individuals that say, this is so easy. It's so easy. Go into this. And there's an element of, this is a business. And with any business, there's ups and downs. But through processes, the right training and guidance, it becomes more streamlined and simple. Not easy, but simple. And by getting to rent, you learn the model. You learn how the industry works, and you can go from there and develop yourself as an investor as well as a property owner. Yeah.
And I think that's a good point. Some people might be sitting on, even very small amounts of equity in their property, even if it's say 20,000. They're like, oh, what shall I do with this 20,000? Shall I buy another property? No, do some rent-to-rent deals. Do a couple of serviced accommodation. You could do 4 amazing serviced accommodation deals for 20,000, 5,000 each one. Yeah,
and just adding to that, I think it raised a good point. It's raised a point that says, well, from what you teach, for example, in the deal packaging, you could be starting off with rent to rent, But that same property, you can potentially later on go back to the landlord or vendor and say, well, actually, through different strategies like lease options or outright purchase that you've generated income from doing a rent to rent, go out and purchase that property.
Yes.
So not only have you now got a property that you've tried and tested, now you own that property and you can benefit from it in the future.
Yeah, and you know, just on that, a lot of the, you know, if we think back, I know you've been with the business for about a year, and
Yeah.
I've started the business 6 years ago now, 5-6 years ago. What actually happened was a lot of the people that started with me, so the landlords that started with me doing rent to rent, some of them actually said, you know, Neil, I know we're 3 years into a 5-year contract, but I want to sell the property. Like there's a guy in London,
Yeah.
super wealthy, owns a big accountancy firm right in SW1, very wealthy guy. And he was like, yeah, I know this house is worth 300,000, but, you know, just get me 250 for it.
Yeah.
Like for if I, you know, knew about lease options back then, because I only really knew a little bit. I hadn't really done any. I knew the basics. You know, that was 4 years ago or something. He was like, yeah, just get me 250. So I saw it to one of our other landlords. You know the landlord I'm talking about.
Yeah.
And he was like, 250. And I said, yeah, 250. He was like, yeah, done. And it was done straight away. He bought that property for 250. So what we did was, I got a fee. I got a nice fee there for selling that deal. But then we kept it in the portfolio. Now, what we should, in hindsight, knowing what we know now, what I should have done was done a lease option with him. Because he was like, yeah, I don't really care. I don't need the money. I just don't want the house. Right? You know, that was it for him. It's in you know, 100 miles away from where he lives.
Yeah.
Wealthy guy. That would, if I had my time again, I would have done a lease option on it. Because that house is now worth, 350. So that landlord that we sold the deal to, he's got 100,000 of equity. One of the reasons that, you know, lease options, deal sourcing and the like is a good strategy. But I just want to come back to one point for people listening as well, is that when it comes to rent, you might have heard what we were saying and thought, oh, this sounds like subletting, or this is illegal, because this is a big thing that gets talked about all the time. And you only have to go on YouTube and type in how rent to rent works, and you'll see all these supposed gurus talking about how rent to rent works, and they're giving completely bad advice. They're saying what you do is you rent a property from the landlord, and then you rent it to individual tenants. No, that's not right. That's called subletting, and it breaches mortgages and the like. Actually, what happens is, and this is how it structures legally, you and the landlord are in an unofficial partnership. And this is done with a management agreement. So it's a very specific rent-to-rent management agreement, which I went through so many solicitors to create this. It cost me thousands of pounds to create this management agreement. So I created this, and if you're interested in having this, because maybe you're doing rent-to-rent and you're doing it illegally, or you're doing it in a way that's not, you know, correct right now, you can actually buy this from my website, propertycashflowacademy.com. You can actually buy this management agreement, use it in your own portfolio, right? So that's the most important thing. You've got to understand that this is a management agreement with the landlord, and you are working on their behalf. And the same, again, something that people don't understand, they make a big mistake on, is they issue out tenancy agreements from their name to the tenants. Again, that's not correct. You've got to have your company name on there, or your name if you're doing it self-assessment, with the landlord's name. If you're again, all this advice I'm giving you is based on experience. I wish I got this advice from people when I was learning, because it would have saved me a lot of hassle. Those same people that were teaching this, I don't know, however many years ago, are still teaching the same incorrect practices today. Because again, the reason why, they are trainers. They're property trainers. They're not property doers. I think that's what makes what we do differently, because we do all of these businesses day in, day out. Limited companies, we're doing this all the time. We're not just teaching it.
Just going back to management agreement. So when you're doing rent to rent, it's a relationship business. So you're creating effectively a partnership, as you've mentioned, with the landlord, where you're effectively managing that property and benefiting from the income. But I think what's so important is you're fundamentally creating a strong relationship with your landlord, but you don't know what's going to happen in the future. There could be instances where, for no fault of your own, the relationship deteriorates, even though you've done your best to maintain that. Now, the most important thing then, it doesn't come down to the personal relationship. It comes down to what agreement have you got in place with that landlord?
Legally.
The importance of that management agreement. Because if you don't have the right management agreement, you'll fall short. So, for example, you could invest in a property. You could be spending and 5,000, 10,000, whatever it might be, and we don't recommend you spend that amount. But whatever you invest, and then a few months later, the landlord says, "Oh, this is a beautiful property. I like this," and they walk away. And then what are you left? So you've now invested all that capital. If you don't have the right agreement, you're lost. You've lost all that input, and you've got nothing to show apart from money out of your bank account, plus the emotions, and then you're probably left with scars that, this doesn't work. This strategy doesn't work. But really, it could have been saved by a simple but coherent legal agreement.
It's funny you should mention that. I don't know if you remember, I told you about this, that client that came to see me for a one-off session. And he was like, "Oh yeah, I've got this issue, and I invested all this money. It was like £6,000 or £7,000." And I said, "Who told you to put £6,000 or £7,000 into a rent to rent?
Yeah.
That's insane. I would never put anywhere near that amount in. I'd probably put half that amount in, right? If it was a good deal." And he told me who it was that trained him. And I said, "Let me see your management agreement, because now you've got all these issues." It was my management agreement from 2014 that had been adopted, and all this weird stuff had been put into it by another trainer. And I was like, this person is not doing rent to rent, because they would have known, well, we then had GDPR, we had this, remember, we've had fires before in our houses, so we've had to implement new policies and new clauses in the agreement.
Keeps on evolving and improving over time.
All the time. Like every time we have some sort of issue in our business, what do we do? We update the management agreement. And touching on what you said about the breakdown in relationship, we've only had one of those, and that was the HMO that we had. Do you remember that one?
Yeah.
Where we said goodbye to the landlord. And it wasn't a big deal because we'd made our profit from the arrangement, hadn't we? It was a good deal. But sometimes, you will come across landlords that you just can't work with. You might get 2, 3, 4, 5 years down the line with them, but you say, you know what, enough's enough. This person has no integrity, or they're just a pain. They say something and they don't do it, or, there's all sorts of things. So that was the issue with him, wasn't it?
Yeah.
Yeah, I'll do it. And then something goes wrong. Oh, it's your fault. What?
Yeah.
Wait, how's it my fault? You didn't remind me. Well, I don't need to remind you about your mortgage or your insurance or this.
Yeah.
Oh, well, you should really. Well, it's in the contract.
Yeah.
So sometimes you'll get landlords like that, and there's no reasoning with them. You literally just need to walk away and say thank you very much. And in that case, the good thing is, cha-ching, you sell that deal on to someone else.
Exactly.
Let them deal with that landlord if they're that desperate to.
Yeah, I think with all the strategies, rent to rent, as long as you've got the right tools, you can always evolve. So that's a great example where you can sell on the deal and make not only your money back from earning the income over the term, but you've also generated additional income from selling the deal on to someone else.
Yeah. So that's a great thing. Rent to rent, there's so much you can do with it. But my advice is, if you're really interested in this, you want to learn more about it, if you go onto the propertycashflowacademy.com, you will find there's a section there for rent to rent. There's a webinar on there. Go on that webinar, and it's a couple of hours long. You can really immerse yourself in the strategy, learn a lot more about it. We've got a foundation course, we've got an advanced course, or just come along to Property Cashflow Live, so PCA Live. You can do a search for it. It's on the website. And we even give you a free ticket. If you want a free ticket, maybe you're struggling financially right now, you can't afford a ticket, we'll even send you a free ticket. So if you want to come along to Property Cashflow Live, I'll be there. Dwayne will be there as well. You can get to meet us. It's a great event, isn't it?
Yeah, I agree. So I think with anything, is always you can learn something really important in those sessions, even if you've done rent to rent before or you haven't. So I've done rent to rent before, buying into the business, but even till today, I'm always learning. There's always things that come up, and that's the most important thing you need to take away from it. It's an evolving business. You keep on learning. You put new systems in place, and if you're going to be guided by the right individuals around you. So it's a great course. You'll learn a lot. You'll come along, ask loads of questions, and those questions will be answered. And I think even when you join the Academy online, if you've got any questions that you might raise during you actually applying the knowledge and going out there and developing your own portfolio, those questions will be answered.
Yeah. And we've got students from all around the world as well. You know, there's people from literally all around the world doing this strategy and some of these other these strategies, these 3 strategies, they're not like focused just on the UK market.
Yeah.
You can do these strategies anywhere. They are legal anywhere, and we've designed them like that through the agreements, all the stuff we've worked on.
I think for transparency, if it's another country, maybe they just need to review the management agreement.
100%.
But the principles effectively the same, but there might be a few laws that you might have to refer to or alter.
Yeah.
But that's where you can seek legal counsel, but you've got a strong foundation to start from. I think apart from that, there's not much else you'll need to review, and that will stop you from going out there and applying it straight away.
Yeah, definitely.
Yeah.
Great. So that is all then for this podcast. So I hope you enjoyed it. Please subscribe if you haven't already and rate us. Let us know what you think. You know, give us some good ratings and we'll produce more content. Give us some bad ratings and we'll just stop.
Yeah, and I think, you know, we're just starting off with the podcast. Raise loads of questions. Like, it doesn't matter how experienced you are. There's going to be things that you might be like, oh, what about this? What about that? And when we got future podcasts, we can answer those. And not only just answer them theoretically, actually answer them with real life examples.
Yeah, with people
give the
who are
pros
doing
and cons of it. Yeah, definitely. We're learning. We keep on learning, but we can share that knowledge back with you as soon as possible.
So I hope you like the podcast both physically, so clicking the like button, and literally. Okay, so that's all for today. I hope you enjoyed it, and we'll see you on episode 3.